All right, what is up, everyone? We're back in the paper account after a couple days here. Got our Ethereum trade going still, which is fine. I thought I might have to adjust it, but we don't, so no need to worry about that. And then we got SGov SPY. It's just shares, whatever, boring. Okay, so I wanted to talk about high, a low risk, high win strategy in open. And the reason why this exists is because of this. This is the, hold on, tighten this up here. This is the volatility smile in this case. Let's get this a little tighter. Whatever, doesn't really matter. So what does this mean? We know that an increase in IV increases options pricing, right? Like that's the thing that we know. IV is high, pushes option prices up because of Vega. So when you have a somewhat of a smile, like an upward sloping term structure where the IV is lowest at the money. Like crap, I'm turning this one off. Where IV is lowest at the money here, and it gradually increases as you go further out of the money. It gives us a opportunity to have a very low risk, high reward trade that doesn't work out all of the time, but it definitely does work out. And when it works out big. So what do I mean? If you come into, so this is the August 29th, the 14-day weekly right here. And there's also some in the 22nd. We can look at both of them. Come into here. We'll use this as an example, 14 days. And here's the options chains and deltas and blah, blah, blah. And so if we open up our implied volatility, we can see that the at the money 350 calls are, because this is a call skew. Like we're looking at the call side. We're not puts. They're not going the right way. I mean, they're kind of going the right way, but it's probably not worth it. We can look at the puts, but mainly we're focusing on the calls right now. Implied volatility goes up. So if you look here in the, where are we here? You can see that at the money implied volatility on the 350s is 220, we'll call it. And it gets progressively higher as time goes out. What does this allow? This allows us to put on a spread for very low risk, high cost, because these options are very expensive in comparison to this. So like, for example, say we buy the, we'll have to open this in the analyze tab so we can look. Say we buy buy the at the money 350. I'm going to put this on so we can see. So we're buying 227 vol, and then we're going to go out and we're going to sell the 20 delta 270, or we could even go out and go to the 650 if we want. It doesn't really matter. We'll go here. Sell the 280. Or, I mean, if you look at the options prices, I mean, shit, you're basically getting the same thing. So why don't we just go out into the 7 and we'll short this. Short that. Okay, 41-cent debit. What is this saying? It's saying that we're risking $41 to make 309. 8x, roughly, 7x, 7.5x risk to reward. Now, you look on the risk profile, obviously the stock needs to really move to hit max profit. It needs to go above our high strike of 7, but it's risking very little to make a lot. And the reason why this could still even be profitable in the sense where you don't get the delta move, the directional move, is if implied volatility comes out of this sold option that you have here because it's so high, and say it just comes down to normalize with this, about we'll go 60. That would still put the spread and the profit even here or going up. It helps the pink line, depending on when it goes, and as you decay down, you can still make money when you realize less vol on this outside leg. So this exact same phenomena is also present in SPY to the downside because of the skew. Again, if I show you in SPY, it's present on the put side. People use it as hedges all the time. If we go to here, right, it doesn't really matter. You can watch this implied volatility column. Super low here, gets higher out here. So it's no different on the SPY side. You can buy an at the money put and go out and sell, 20 points down. You're risking 387, but got this on too. Risk 387 to make 1600, right? 387 to 1600, and it's because of you can't get this on the call side because they don't have that volatility skew. If you buy this, let's see, what did we do? We bought here, we went down 20. So if you buy this and you go out 20, sell that, it's an 817 debit to make 1185. Risk reward profile is garbage. 814, 1186. It's because of the skew and the volatility. It's this right here. Well, this is going to be real confusing. It's because of this. Let's see, what were we doing in September's? You see, as the calls, the at the money volatility is higher than when you go out more, right? But yeah, 25 is good. I don't know why this is just giving us terrible marks. Holy, use something a little more chill. So, and then here you can see the at the money put volatility, 644, is 13, and it gets dramatically higher as you go out. So you're hoping that you realize this volatility here and don't realize this here, and that'll push your spread up. So that exact same trade always exists in the SPY. People use it as a downside hedge. I might have talked about it before, but it's cheap downside protection. Buy this, go out, usually around 20 delta. Sometimes you can even get up into here. You can like buy this, whoops, and then go out to like the 25, sell 807 to make 2100. Right? It's a good downside hedge. Doesn't work a lot of the time. That's kind of the point. That's why the risk reward is skewed. It doesn't work a lot of the time, but it exists. It exists in SPY on the put side all the time, and it's a great hedge. Call side, 55, 23 delta. Call side, not so much, right? So anyway, you can use it in SPY, but mainly I was pointing it out in open, which open, has been bumping hard and could easily rip to $8, and you're risking $40 to possibly make 300, 10x on your money. So, I mean, it's really not that bad of a trade, and you can layer it. You can do one vertical here with 14 days, and you can come out to the 21 day. And then you can, these aren't all the strikes, or, sheesh. I guess we're maxed out on the fives. Oh yeah, because so you can do the 29th, or you can even do next week's, which I did in my live account. This is why I was getting confused. You can buy this 53 delta, come out, could do the 22s. Probably wouldn't be a bad idea because you're pitting that, or you can come out here one more 30-cent debit, 30 cents to make 170. So what's that? 6x. Or, I mean, you can widen it, or you can bring it back in, go to the 5 here, 26 to make 124. So, doesn't work out all the time, but you have And it's not just a directional trade. You have volatility with this too. You're shorting. You're shorting a higher vol than realized, or not realized. I'm sorry. Shorting a higher volatility in the outside strikes and buying and at the money, hoping that you realize more than this, but not as much as that. So, yeah, that's a quick one. There's nothing really to do. I think I am going to put these trades on though, because we are in a lot of paper account. So I'll do 5 and 5. So let's see. We're risking 200 to make 1,500. We'll send that. And then we're risking 135. Let's see. I don't like this one as much. Let me see if I can redo this one. Which is 22nd? Let's see. We'll buy this and we'll sell. Man, there's not as much because it's closer. What is this? What does this give us? 28. Yeah, let's do that. Let's do that. So we'll take 5 of these. We're risking 140 to make 860. I think that's pretty good. Throw that in. So we'll just add to our positions here. For now, with one of those, we can we could add a risk reversals trade in SPY, but it's a little big. I don't think I'm just gonna sit with the long thing. I mean, we can put it on just for fun, and it is a paper account. I guess it doesn't really matter. We'll go SPY and we'll do a September risk reversal trade in SPY. So we'll buy the at the money, and then we will sell the. Let's sell the. Yeah, let's do that. Let's keep it small. We'll do a little risk reversal. Let's just analyze it real quick to make sure we like what we're seeing. We're risking 233 to make 767 if SPY falls off a cliff. I like that. So we'll throw that in as well. Do a little risk reversal trade. Risking 233 to make 767 on SPY. See if we can get filled on that. And yeah, that'll be this video. A little bit about asymmetrical risk reward and probabilities that you can risk a little to hit it big. All right. See you guys next time. Thanks.